I'm going to invite three super interesting people now. So I'm going to first invite the moderator for the next session, Dr. Anurag. Dr. Anurag has been a visionary leader. He has guided, mentored a lot of people, startups, including people like me. So thank you, Dr. Anurag, for being here. Really appreciate it. I'm going to invite Mr. Arul from Bearing Private Equity. He has been in the private equity space for a long time. I really have had some amazing conversations with him, and I'm really looking forward to listening to you today. Thank you, Arul, for coming here. And last but not the least, Mr. Naveen. Mr. Naveen has been a very senior person at McKinsey. He has traveled across the world, and now he's leading the venture capital space. Thank you, Naveen, for being here. So, Dr. Anurag, I'll leave it for you to bring some interesting conversation. Thank you, Dr. Anurag.
Yeah, so I think I must thank first Chirag and both Naveen and Arul for being here. So we had some discussion saying how do we make it general. We had some rehearsal script, but we will not stick to it. I just want to make sure we'll keep it as general and as enjoyable for you, and would like more participation. That's the intention. And morning you heard Professor Jhunjhunwala, but before we go into a real, I have really two different sides of the coin, right? We have TVS Capital, so that's a different kind of fund, and we have a private equity, a different player. So I think, and I'm just saying that, the question that will remain in most of the guys from your two different perspectives, is indigenization important, or innovation important, or at this point of time, given what Mr. Trump is doing in the next 5 years? So where do you see this? All of this is going on. India is doing something different. How does the PE see this change for these startups? How do you see it as a fund, which is, as you said, large ticket items? Where do you see these guys? Many of them are seeing as to what, and they are looking at you. You guys invest together.
So just to give you a quick introduction, I'm Arul Mehra. I'm from Bearing Private Equity. We are an early growth fund, started in 1998, and we've invested across sectors since then, from beginning IT, which was deep tech then, to your pharma, consumer, financial services, industrials, to now SaaS, EV, wearables, space tech. So the point I'm making is that we are evolving as India evolves. And our thought process has evolved as India has evolved, and the capabilities of the population to do productive work change over time, and that's the opportunity that we try to tap. The specific question which was asked, indigenization or innovation, we look at it more, bottom up. Now, it comes out of conversations. Conversations like yesterday, I was having a chat with a portfolio company who's came to me. I want to put up a 1,500 crore plant and want to raise capital for that. What do you think? I said, why 1,500 crores? I mean, that just sounds too much. He says, that is the minimum scale required. Why? He says, because the plant comes from China, you need so many components, the customers require a certain order quantity. I said, why is it coming from? So if you ask those questions, you realize that it is coming from China because no one in India started making it. Then I asked, what is the secret sauce of this guy? He says, this requires a furnace where you need extreme temperature control, and you need every point temperature should be consistent, otherwise you will not get the right quality and yield. And without that, nobody would want to buy the material. Then I said, we have invested in this company called Zyma, which presented earlier today. We were one of the investors. I said, why don't you talk to them? And there is another company we met in Bangalore, which is making some equipment for semiconductor company. I said, why don't you talk to these two guys and get it designed there? Because what you can do with all this, if you do it in India, you can probably do it for 300 to 400 crores. He already has a pilot plant which is built for 100 crores. I said, why do you even need to go to China? I think that's where the crux lies. If you go to the large industry guy, he says, I'm putting $1 billion capex, I don't want to take a risk with new equipment vendor, this, that. But I think if you solve the problem bottom up and say, but why? And keep asking that question, why? Eventually you'll get down to some one or two constraints which you're assuming and which may or may not be there, and then just solve for those. I think that whole frugal innovation, indigenization, all of that is connected. I think one of the things that you mentioned in your WhatsApp was what is the role of venture capital, private equity. I think ultimately it is to basically harness the potential of the population and to make it more productive. And in the process, it will also make more return and take a part of those returns and become rich. So that's the whole motivation. So we are doing what everyone else is doing, trying to do things better, faster, cheaper, in a more innovative way. And if there are a million mutinies, ultimately it will help the country grow, become more innovative, become more indigenous. And it's actually quite simple.
So, fun fact, Arul and I were MBA batchmates 22 years ago.
Yeah.
Rough math, right? So it's great to be back on stage with him. It was not planned. Chirag just happened to have called us and we found out we are going to be on the same panel. So it's great to be on this panel with Arul. I represent TVS Capital, as the introduction said. We are a private equity fund, started in 2007. We are in the process of just completing the raise of our fourth fund from which we are deploying. It will be about a $500 million fund. We are India's largest fully domestic fund, we think. That is kind of independent. And we like the fact that we are fully domestic. Our LPs are all Indian. And it's part of the broader, I think our intention is to deepen private capital pools in India. A large part of capital for one of private equity venture capital comes from overseas. And I think our founder Gopal's intent has always been that to deepen these since when we started the fund in 2007. And we're glad that it's happening as we speak. We have two focus areas in the fund. We do a lot of financial services and fintech investing, and we do tech services and software investing, and I lead the tech services and software part. And like I was joking with you earlier, it's very shallow tech, right? When you talk a lot about deep tech, we're very shallow tech. It used to be deep tech, as Arul referenced, but now, and it has a very big implication in this indigenization, innovation conversation we're having. And in this Trump era, it is a big question on how any export industry will operate, especially when H-1Bs are at threat. And so for us, there is a big industry level question of how services will evolve at a very macro level, especially in the world of AI, and you have services as software. So just to give you one example, we were talking to a company that is now building agents on top of, so they work with data, they work with ERP systems, and they work with cloud platforms. And this kind of essential triangle of all three allows you to operate data at a very granular level and build agents on top of that, which are far more agile, far more customizable, far more modular, and in essence, far cheaper than putting a heavy code or software that's more rigid, has to be installed and so on. And they're revolutionizing how services companies can play in a new world. So that's one layer of change, and that has nothing to do with politics or geopolitics, it's just to do with innovation and AI and so on. But layering onto that world, how kind of the new geopolitics is going to play out, we don't know the answer, but it's something that we are actively exploring, especially how much will be onshore versus offshore, etc. But I move all this aside and I look at the geopolitics, and even before all this happened, when COVID happened and China +1 was playing out, DeepSeek more recently, I do think that the world is moving away, and I think it's things that we are all observing, away from a global expansion and a globalization to a localization. It's one of those cycles that happens every so often. We're getting more kind of local, right? In that local world, being able to compete in this very uncertain world requires some sort of base foundation on which you have to be able to stand. And I think we can all agree that that foundation is, for all the investments we've made in the last 50, 60 years, especially in R&D, is a bit shaky. I mean, if people were to take away core IP from us, we will be in trouble. And so I do think, to your broad question, I think it only accentuates, but it's a trend that's been happening. It's only, I would say, an acceleration potentially of that trend, and therefore we should be potentially more alarmed at this point.
So with what you define and what you have been doing, I'm asking that since these startups are there and there is a lot of things, and since morning, a lot of discussion happened around that. How do you define, so as a PE, at what stage you think they should look for money? Because most of the guys are having a bright idea. They have a different ticket size. You look at a different ticket size. You probably are looking at similar or lesser. But when the venture has to decide what and when to go for, do you generally have some kind of a rule inside, or is it a science, or is it a gut feel, or what it is for you guys? Because nobody has understood that mindset ever. So I'm just trying to ask.
See, the money is like oxygen for a company. You have to pay expenses, you have to pay payroll. If you have it, you don't need to raise. There's no rule. If you have the money to fund. The second most efficient way to raise money is get customer advances. Sell your product or idea to a customer first. That is non-dilutive money, right? I mean, and use it to build the product and deliver. So the smartest guys do that. So I'll solve this problem, you give me some advance, and they manage within that. But if your product or specific solution that you're building does not lend itself to either putting your own money in or taking it from friends and family, which also I say is your money only, right? Or taking advance from a customer. Or now there's a fourth option, take a grant from the government, which is also opened up now. Then you need to raise money, whether you are just starting out, because how will you keep the lights on, right? So it is defined from the situation where you are in and what you're building. Some situations require less, some require more, and environment keeps changing. Sometimes seed is hot, sometimes angels are hot, sometimes they are cold. So what you can do also changes with the environment. But yeah, I think that would be all I want to say about this right now.
No, my question, and I'll come to Naveen for sure, but in the sense, don't you look for something in them when you are looking that
is a
I'm
completely,
okay to pay? It's not for the start.
That is a completely different question. What we look for, very, very simple. What we look for is what you're doing, will it have a very large market size? Second, will it create an entry barrier for others to come in so that it gives you enduring pricing power, right? I mean, our Ravi Krishnan was their professor, right? All good business are, I think he used to call perpetual, profitable, and one more word I think he used to say. So basically it has to be large, it has to be scalable. Yeah.
Yes.
Perpetual, profitable, scalable. So that comes from large market, that comes from having some entry barrier or pricing power, which comes from that entry barrier. That entry barrier comes from technology, network effect, some IP, some really enthu founder who has a history which makes him the best at solving that problem. It could come from anywhere, right? And third is the team which is executing is the right team. Do they have integrity? Do they have intelligence? The last question, which is more, I think, is price value. Is this the best thing I can do with my capital? So you may have all three, but I may have something better.
Okay, that's interesting.
No, and I'll just build on what Arul said, because actually there is a lot more science than art when it gets a little bit further down the chain, right? So if you think of an idea, at the idea level, it's mostly energy. That's all you can look at, right, really. And you can ask some questions, some smart questions, this is a large enough opportunity, etc. But at that very kind of seed stage of it, it's a lot of gut feel because you don't have anything to look at. When typically they come in and they do look at a much broader range, we are more narrow in that sense. We do come in a little bit later. We have enough to see. There are balance sheets to look at, there's P&L statements to look at, there's a track record. You said you will do this. At the seed stage, I still have to go by their past track record, not by what they're doing right now. But at this point in time, I can look at what they've done. Have you said you'll do this? This was your plan. Did you do it or not? So there's a lot more evidence. There's an ecosystem that they've interacted with that will give you feedback about how they've done. Customers, suppliers. So there is a lot of data, right? So it's a very, very scientific process, I would say. Now, is there art and judgment? Of course, because you're still predicting a future outcome. So nobody has a crystal ball. You can take your best guess on what that future outcome will be. But there is some crystal ball gazing. But I'm just saying there's a mountain of data to give you a little more objectivity on that decision than in earlier stage, right? So I would say it's quite scientific. It may not be obvious, but the four things that he said are exactly the four things that we also look at. So it's not that different, right? You look for a large market. You look at the company's business model and the ability for that company's business model to withstand shocks. Because shocks are inevitable. Any business you're in, shocks will come. So business model can withstand shocks, can pivot. You look at the team And can the team kind of last the distance and work through all the things that will happen as they go? And eventually price has to make sense because that's where the return comes in, right? Whether you get to the outcome. Those are the 4 things he said, those are the 4 things we look at. So it's very, very stock standard. It's not more than that. The real question then gets to the how you execute that. How deep are you willing to go? What's your diligence quality? What is the judgment that you're going to use on the team? And so that's the real challenge. And I'll give you to your question specifically, which may, because of the fund and ATEX and Chirag's kind of mission and what he's trying to build, deep tech is an interesting space. Now we can all define deep tech, etc. But let's talk about frontier technologies, things that have a certain IP in them, technology IP in them that are being built out. The fundamental challenge we find, right? This is an area we have looked at as an area and decided whether to go in or not, has been that we have not been able to find that combination of large market plus business model that gives enough confidence that we can look at in the track record. So you just need a little bit more to see before we can say, okay, now I can see where this goes, number one. Number two, a lot of companies, and this is not just true in deep tech, but in the spaces we are in, tech services and software, you tap out at a certain point in the India market alone, right? I'd love Arul's view on this, but India market alone, unless the demand side is large enough, you can't build a large, resilient, growing business. For us, our dream is to take companies to public market, ideally. May not always get there, but so that requires a certain scale. So typically when we're looking at it, outside of financial services, which has a large internal market, many of these technology products, is there a large enough export market, and is this the right team to take it? There is a question for that. That's the second. And the third kind of challenge for us is, can this stand on its own 2 feet against technologies globally? Because the one thing about technology, as we all know, is technology travels, right? And the best technology travels very, very quickly, unless there are like real regulatory barriers or something that does not allow that technology to enter or exit a market. Your technology has to be globally feasible. So when you put these 3 or 4 constraints, there are other ecosystems in some spaces that become better or worse. And that's fundamentally one of the challenges we need to overcome. And I'm speaking quite plainly. I mean, I'd love for all of these. I mean, as an album maker of IIT, I would love to see all this come through. But that's the fundamental challenge as an investor that comes in our way. And I'll say the last thing. End of the day, as an investor, I'm a steward of my LP's money, right? End of the day, that's the one thing that I go to sleep at night with. So while I love to encourage lots of people, the most important question I have to say is, am I preserving and growing the money that people have entrusted us with? I would imagine it's the same for Arul. And that's the kind of underlying question in all of this.
So you want to add something based on him?
No, I think he's covered it absolutely well, and the point about market constraints in some of the categories in India is also real. If you see China, they seem to have solved it. They also have the same problem, right? I think it just requires the ecosystem to say, yes, we will do it. And I think culturally we are getting there. We have Shark Tank, which is a super hit show in India now. So entrepreneurship is there. We have got good academic institutions, and getting a job versus starting up now. Starting up is not seen as something too risky by parents. Then they're okay with that. So I think we're getting there in terms of the ecosystem. There is a lot of, still we are a smaller economy, so we are maybe 1/6, 1/7 of US. So we will still not get a 50 million check to say, okay, go try something. That will not happen in India.
Yes.
Because the capital is scarce, I think I am getting satisfactory opportunities where I am able to say, okay, this thing works with this customer and now we are going to scale it. I don't have to imagine whether this is going to work. I'm able to see it demonstrated with POCs and then take a call, which is a much safer call. As compared to, say, in the Western markets, that deal would have 20 suitors. In our country, because the capital is scarce, it's a good opportunity. There are five institutional investors who are looking at that way. People like ATEX, Speciale, 3-4 others. So we like being in spaces where there is less competition, right, ultimately. So we have still not reached it, but we'll reach there. You have 20 more unicorns listed, I think we'll reach there. Because those guys will say, okay, now we have seen how this works. And now I'm willing to cut checks for good quality entrepreneurs who are going to try something new. So we'll get there.
So I'll come back to I heard, and I'm asking the follow-up question. If you look at this whole India story part, And our topic is about what the India's economy we are talking to. Even if we assume that 2047 we are not going to be 25 trillion, we are going to be somewhere 15 trillion or whatever number it is. Still, it is like a 5 times jump, right? So, which is fairly large. And a lot of these guys work on manufacturing, which is little different gestation and time cycles of the, as you say, investment is best if customer is willing to pay. If someone is on the B2C side of a manufacturing today and wants to look at auto, it's a different story. And someone wants to build a different kind of a drone, which is totally out from a thing. And IIT Madras talks about e-plane. How do you see for them this whole stuff? It is a little different. We discussed, we looked at the issues, but when we come to that, does that become a different kind of a challenge for them, and who in India is going to help it in this dynamics of the change which we are talking?
So that's an interesting question. See, India, if you have a prototype and it's working and you have a customer, there is enough capital, especially 5-10 million, and that just is the size of the market in terms of capital providers, right? For things like e-plane or things like some of the sky routes or Agnikul, or where you want to raise now 200 million and you still don't have very verifiable revenue, that is hard because our financing markets are not deep enough. There is one potential solution there, I think, which is the SME listing. Okay, because we've seen a lot of I think every good opportunity starts with some sort of a fraud or bubble or some mis-selling. But it has shown that a lot of money can be raised from that ecosystem, right? So some of these companies, when they go and try to do SME listing, see, SEBI took a leap of faith with Zomato. Earlier, the rule was you cannot list loss-making companies. You need to have profits for 3 years. They took a leap of faith. They allowed the loss-making company to be. It's done wonders for the investors. Similarly, if there are 2 or 3 of these deep tech companies which require $50 million kind of Artpark capital, what I call, right? So, and if 2 of them succeed, then you will have, because it's options, right? People are playing options. Okay, let me try. India, gambling is a big thing, right? So I think that can become a solution for some time. And then some of the deep-pocketed unicorn founders, they will reinvest, and as the market grows. So when I started investing in India, 50 million check used to be big in PE buyout world. Now it's nobody wants to look at a deal in the PE buyout. All those funds have become like 2 billion fund, 3 billion funds. I want a minimum $200 million deal. So it grows with the size of the economy. When our economy becomes 15 billion, you will start seeing those checks. But as an interim, I think this whole sort of a crowd-funded SME listing can be one potential solution for that segment. The rest of them, there is enough money available for good ideas.
Yeah, no, I think I was just listening to Arul, and he's probably right. I think we are, very pragmatically, we are in a stage where we're maturing that side of what we do. I mean, 4 years ago, 5 years ago, who had a deep tech fund? Now, IIT Madras Research Park is like a standard way stop for every fund that wants to be in this space. We're one of the best, I would say, outside of ATEX. We have another VC fund in Chennai that also does a lot of deep tech. And it's become a thing, right? It takes, now if the seed checks were coming for this in 2019, 2021, it's going to naturally take 4, 5, 6 years for these to evolve, and tech also has a slower cycle, right? So I think it's only a natural evolution. I think we stay at this, and with the kind of capital and the interest that it's developing, and the support of the kind of this public-private partnerships that are happening, I think this is fantastic. This is on the right track. Now, we should be constructively dissatisfied and keep pushing for more, like everything else in life. But I'm just saying, objectively, I think it's the right time. And this is kind of Arul's view as well. And I think it's a pragmatic view. The only thing I will say, though, is as we look at the types of opportunities, the one thing he called out, which I think is very crucial, is we don't have a lot of capital to splurge. Like, where do you see 2 PhDs coming out, we're going to do an AI product, chal, 100 million, de diya. Hey, boss, it doesn't exist, right? We don't have that kind of capital. I know, because I raised a fund in India. It's the largest fund in India, fully domestic. It's barely touched 400 million. It's like, it's capital is still scarce. People are getting there. Natural evolution, it'll get there. So I do think, though, that people who are in this space, I really wish there was a way to connect them with the commercial, pragmatic side of it sooner. That we shouldn't get too wound up in the tech and get to the commercial side. And there will be 2 or 3 implications of that. Number one, can you get to an international market sooner? And the reason you do that is twofold. Number one, you do get uh, diversification, and you get usually better profitability if you get into the right markets. It's hard, but number two, you actually test that your tech works. It's not just for India, because for India alone has two challenges. One is there could be tech that comes from elsewhere that beats you, and you'll have to figure that out. But more importantly, you've proven yourself at a global stage, and that matters even to your Indian customers. So I do think that some of those commercial dimensions, when I do speak to companies, that is the push I would give them. And if there's a collective way to get there faster, especially on some of these opportunities, that's what I would do. Because the commerciality of those four things that we talked about, that business model part is a very important part, right? How is this going to make money in the long term is important. And you have to think about that early. It can't just be around the technology. That's the push I would give. But I think we're on the right track. I mean, for us, for our fund, for example, in Fund 5, our next fund, this is definitely a part of what we want to do. It's not there yet, but we believe that in the 3 to 4 years that it takes to raise our next fund, we will be there. And these are the types of companies we'd want to invest in.
I'll just add one more thing. I think he's absolutely right about getting the customer very quickly. If you have an anchor customer and you can validate your product. So with that thought, I think we had incubated one company called Sanchi Connect, which Sunil, he's here. The idea was to connect deep tech startups with corporate innovation teams, where they are looking for a solution, and you say, okay, I know these 10 companies which can potentially solve this, and that whole thing accelerates, right? Now I think he mentioned a point about overseas, and now I'm going to tell Sunil we need some overseas customers on the panel as well, right? It's a very relevant point. I mean, if you can test out some of the SaaS or tech products with some globally leading companies and get one anchor customer, and investors look at, yeah, 2-3 अच्छा brand hai, 2-3 good brands who have tested you, even if it is an early stage, I think people are willing to take those bets.
So फिर वो academia को कहाँ लाता है इस चक्कर में? So if you look at now, in the morning, that issue.
Dr. Anurag, this will be the last question. Okay. Thank you.
Right.
Sorry.
So the question comes is, does academia really will play the role about it? Because that transformation, what you're describing is a different thing. And if you look at DeepSeek, if you look at ChatGPT, they are not from Stanford, they are not from anywhere. It's an equal question to academia itself, to us or to Professor Jhunjhunwala, who was really raising this issue, saying, how will you give me on to the deep tech? But there is a reverse question saying, it's not necessary that deep tech can come out only with the academia and a help on that. So in that sense, where does academia, you see it playing in given this whole thing? And we are investing too much, we are talking about too much. It's not that we don't receive, we have 500 crore, 300 crore government is giving us. We are doing it, Artpark Research Park is there, industry is coming to us for research and putting some things on that. Where do you see that? Where do you see it? Or do you see that there is really no because most of the ventures are coming to academia, saying, okay, you give us something to get started with to reach to you or to even him. So whether there is a role or we just will evolve to what you are saying everybody else in the US is.
Yeah, I have a point of view on this, because actually in India, I think academia has an outsized role compared to other markets like the US and so on. The reason I say that is, if you look at a lot of the innovation that came out of the US over time, including the internet and so on, it came from defense spending. DARPA would, and different people would be involved, including academics and so on. But there was at least you could see the examples that came from there came because funding was provided with kind of public infrastructure support and so on. I see that, and then I look at private companies and their spend. Again, I'm going to the US as an example. We could look at China. So private companies and the kind of R&D spend. We woefully underspend, right? As a country, and our mindset is never kitna denge isme, right? Because we never know if something will come out of it. As a low trust, you can't put money into something where you're not able to see the outcome. And that pervades everything. It goes to us, it goes to our LPs, it goes to this as well. And so in that world, where is innovation going to come out of? Kahan se aayega, right? So at some level, I'll take an optimistic lens to that and say places like IIT Madras Research Park and like Professor Prabhu Rajgopal or Professor Satya, amazing, right? What they are doing in terms of, so much like 25 years ago, starting up was a bad word and you couldn't do to Shark Tank now. Now these are the cool professors on campus These are the people who, wow, so cool, right? They're doing. So I do think that that is changing. Is it changing fast enough? We'll never be satisfied. Constructive dissatisfaction to hona hi hai. But a point I'm making is that is shifting. Academia has a bigger role to play here than pretty much anywhere else. And the more we can celebrate these people and create more centers like the research park and spur these innovations on, then capital will play its role. Just like VC is happening, PE will come in and we can do things. But that's my simple answer. We have a much bigger role as academia than anywhere else.
Yeah, I've been to all the IITs, at least the incubation centers, and met multiple startups. So academia is already playing a role there. What I would, I think, like to see more, where it can be more impactful if they all talk to each other as well. So I think they are run as silos right now, and but within those silos, they're doing quite well. We've invested in one IIT Madras research park company. We have done something with an IIT Delhi company also. We have done something with one IIT Kanpur company also. So there is good stuff happening everywhere, and outside of what we do also, there's a lot of good stuff happening. But I think if they network more and say ideate more together, more collaborative, more, I think it'll work even better.
Sorry, can I just say one thing in addition? Because there was a similar panel, and for me, this was an important point that we were discussing as a panel about 6 months ago, actually in IIT Madras on the campus. See, the one difference, and I just want to build on what Arul said. If you have missions, you can bring a lot of energy behind a mission, right? A mission is like ISRO, yeah, it's a big goal, right? Where you need multiple minds and brains to come together. And one of the challenges traditionally has been we've always thought small. So one of the things that IIT Madras has been doing over the last few years is getting professors also to dream bigger. Bada socho or money we'll find will come its way, right? And that I think is a key mindset shift. That means if I have to think bigger, then we have to work across. We can't just do it ourselves. We have, and I think the mission mindedness that we have to bring, meaning take a topic and say, boss, isme we want to be the best. And that requires a very different way of working. It has to work across IITs and so on. That for me is, but that's a kind of it's like big goals type of thing, right? We can kind of push what we are doing going forward. But I feel like that would be if I had to pull one lever, can we pick 3 things and then everybody works on that versus each group doing its own little thing and they're competing and so on. It's good, but it doesn't move us as a nation on IP. It doesn't move us forward.
Interesting. So I think it's the time he's
Yes,
he's just here. So I will not. While it has been a very interesting and valuable discussion,
Then thank you Naveen, thank you Arul, thank you Dr. Anurag. Really appreciate it.